Hello and welcome to Startup Street. I'm Arundhati Ramanan, and joining me from Bangalore studio is Ritu Singh. These are the top headlines from the startup world.
5, 4, 3, 2,
Ather Energy makes a tepid debut on the Lal Street. Shares list at a premium of 2% over its IPO price, but ends with cuts. The management tells CNBC-TV18 Ather Energy remains bullish on near-term growth.
Restronext, a skincare brand, records double-digit EBITDA positivity with a 10 times growth in revenue in FY25, achieving annualized net revenue of 200 crore rupees. The D2C startup now targets 500 crore rupees annualized net revenue by FY26.
Celius Logistics secures 250 crore rupees in a round co-led by Restroworks and Omnivore to expand its cold chain network to 1,000 cities and enhance its tech platform, with plans to scale operations, including its rider fleet, while focusing on climate-resilient logistics.
Gut health startup The Good Bug raises 100 crore rupees in a new funding round that was led by Suskena Asia VC with participation from existing investor Fireside Ventures. This fresh capital will be used to accelerate its research and development efforts.
Government issues fresh, stringent guidelines for satellite internet players like Elon Musk's Starlink to get a license in India. Wants essential functions to be located within India, citing tensions with Pakistan. Minister of State for Communications says satellite players will have a minuscule role compared to traditional systems.
OpenAI is set to buy artificial intelligence-assisted coding tool Windsurf for about $3 billion as per a Bloomberg report, thus making this deal OpenAI's largest acquisition to date, and that will complement ChatGPT's coding capabilities.
Swiggy exits private label business by entering into a strategic agreement with food service platform Cuisina for the exclusive license of its digital-first food brands. This comes a day after Money Control reports that Swiggy ends its hyperlocal delivery service, Genie. Those were the headlines that we're tracking for you this evening. But on what's brewing today, Celius Logistics has raised 250 crore rupees in an oversubscribed Series B round. The round, which was a mix of equity and debt, was led by Restroworks and Omnivore, with continued support from existing backers like IVCap Ventures and key debt partners, including Trifecta Capital and Black Soil. The funding will power Celius's expansion into over 1,000 cities, strengthen its technology platform, and scale its growing presence in critical sectors like pharmaceuticals and food logistics. Joining me now to discuss this further, Swaroop Bose, the founder and CEO of Celius Logistics. Swaroop, thank you so much for taking time out and being here with us on Startup Street. You know, you are addressing this big gap in India's cold chain industry, right? So if you could take us through what you have on offer and the kind of efficiencies that you're bringing in for your clients and the sectors that you're currently focused on.
Thanks for having me here. And it's been a big day for us after announcing our fundraise and closing our Series B. With the new investors, Restroworks, Omnivore, and existing IVCap coming in, we have been building a cold supply chain network across India for the past 4 years. Now, we are concentrating on segments like pharmaceutical, dairy, F&B, quick commerce, e-commerce. In fact, we have started working with new age brands, which are smaller startups. They are the small companies that are trying to scale up across different cities. We have been working with them, creating a smaller logistics network for them. And this year, we are concentrating heavily on this, whether it be the new age business or the pharmaceutical, or creating a railway network for our entire supply chain. Celius is very aggressive on our expansion plans across 1,000 cities by this year end.
Right. So very aggressive on your expansion plans. If you could sort of, break down how the 250 crore rupees that you've raised will be allocated across your core areas like technology expansion and cold storage infrastructure.
So most of our money does go into the technology expansion. We have been creating our own business platform, our own transport management software, warehouse management software. These are dedicated directly to the cold chain. These are one of a kind, which is handling the entire cold supply chain on our platform. We also use the money to expand into more warehousing, more cold chain touch points. We onboard more vehicles. We go to other cities, tier 3, tier 4 cities, and we make sure that we create a cold chain network where our clients can then step in.
Right. And, how does Celius Logistics, you said one of your big plans is to aggressively scale and reach 1,000 cities, right? If you could sort of tell us what your current presence is and what challenges do you anticipate in expanding to, less penetrated or rural markets?
Today, we are in more than 600 cities. It has taken us 4 years to reach that scale. And now we are looking at 1,000 cities where we are expanding into places like Siliguri, Guwahati, Kashmir. We are looking at going into Visakhapatnam. So you see our expansion is pretty much even across India. The biggest challenge that we face is getting the right partners in such areas who can then grow with us. We always expect a local partner to tie up with us, help us with the assets, and then we take over the management of the entire asset. But we have been very blessed to get the right kind of partners across India. People are very confident now that we have stepped in about investing in cold chain, which has helped us to scale up to here.
Right. So meeting the right partners is essential there in your expansion plan. Now, let's get into numbers then, right? With a reported 2.5 times year-on-year top-line growth since 2021, what are your revenue targets over the next 2 years? What are you currently clocking? And what segments do you expect to drive the most growth?
We are currently clocking about 300 crores in ARR. We are hoping to continue our 2.5x growth over the next couple of years. The segments that keep giving us more and more revenues are our transport division, which is our oldest division. Pharmaceutical is something that we are betting on huge this year. We started pharma division only about 5 months back, but we are getting a lot of positive response from the market. And you will see a lot of news coming out of Celsius this year when it comes to the pharmaceutical division. And the new age division, which is working with the new age brands, the startups, the smaller entrepreneurs, that division is also seeing a lot of growth. That's our D2C Connect, where Celsius will be connecting directly with the consumers for the businesses which want to expand. So these divisions, we are expecting that a lot of revenue will be generated, and obviously quick commerce. One of our biggest play in the market is quick commerce today, where we are working with companies like Zepto, we are working with Zomato, Blinkit. We are hoping to expand that network. We are hoping to onboard a few new clients who are just entering the quick commerce market. So overall, all these divisions together will be fueling our growth.
Right, absolutely. And you were talking about a pharmaceutical sector, which you just launched about 5 months back, right? So what strategic steps is Celsius taking to deepen its presence in the pharmaceutical logistics sector? And how does it plan to meet the stringent compliance and safety standards that are required for transporting critical medical supplies? Also, any other new sectors on the radar?
Celsius was formed in the middle of the COVID pandemic. In fact, the first transport we ever did was vaccine. So we have been very conscious about the SOPs and the IOPs required by the pharma divisions. We have not touched the pharma divisions in our first 4 years because we were building up the systems to meet the strict compliance that you're talking about. We, in fact, wanted to get ready, make sure that the compliances are in place, and then enter the pharmaceutical division. Today, we have created a very big team of pharma sales and operations who have been trained. Our software has been upgraded to accommodate whatever the pharmaceutical divisions need. And that is what we are launching in the market as a pharma division. So we are looking forward to a lot of interaction with the pharmaceutical companies and hoping to align our services to them.
Right. And, with increasing investor focus on climate resilience and sustainable infrastructure, how do you plan to evolve your technology and operations to align with decarbonization goals and energy efficiency mandates?
See, the company by itself is a sustainable company. We are working in food preservation, food security, food safety. We are looking at creating smaller entrepreneurs in our transportation program. Going ahead, we are looking to adopt a complete EV solution in our last mile, which is across India. We are handling last mile in more than 50 cities across India. And we are hoping to completely turn that over into an EV kind of infrastructure. We are just waiting for a few tie-ups, a few technology to catch up so that we can launch that. On top of that, whenever we are opening a new cold storage, now we are doing that across India with a lot of partners. Our first bet is always solar. We always push that cold storage has to be solar oriented. We make sure that the compliances are in place. And with every step that we take, we are always looking at sustainability. The whole company drives around the idea that we have to create a sustainable future.
All right. And, if you, before I let you go, if you could sort of point out to us what the key goals for this year will be for Celsius going forward and what are the targets you hope to hit?
One of the key goals is, like we announced, 1,000 cities. Now, the idea behind the 1,000 cities is not just to blindly expand into it. The idea is that we open up the market, we open up the cities to many more brands that can then cater to these cities. They can sell their products there. We can have a supply chain. These cities open up a whole revenue market, not just for us, but for our brands. Even the larger brands in India today are not able to penetrate into the rural market simply because there's no supply chain system to hold it. This is a perishable industry. Making sure that the temperature controlled products do not go to waste, they are used properly, they are kept properly, is a big challenge which Celsius is answering. So our focus always has been to make sure that our clients get the best service, and we are able to expand into markets which were untouched before. That's driving our growth now.
All right, Swaroop, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best going forward.
Thank you so much.
All right, we'll move on to what else is brewing today, and that is Stimuler, which is a voice-first AI tutor for English as a second language users, and they've raised $3.75 million in a pre-Series A funding round that was led by Lightspeed, SWC Global, and other investors as well. Now, these funds will be used by the company to scale their in-house AI infrastructure, grow their technical team, and accelerate user acquisition, which is aimed at increasing monetization by over 5 times in the next 12 to 18 months. Now, founded in 2022, the platform claims to have more than 4 million app installs, which is a 5-fold increase in the past year, and has more than 45,000 paying users across Android and iOS. On that note, let me invite Akshay Akash, who is the CEO of Stimuler, for more on the company's fundraising and their plans ahead. Akshay, welcome to Startup Street, and thank you very much for your time here today. Before we get to that funding round, briefly tell us about Stimuler and the market gap that you saw, which you're solving for, and why the Square focus only on the English language.
Hi, super nice to be here. I think I have seen quite a few episodes of the series, and it's great to be here. Honestly, in terms of what we are trying to do at Stimuler is a voice AI mobile app, which, as you say, helps English as a second language speakers improve their conversational skills. And the reason we focus on English as such is because English is very different when compared to other languages like Spanish or French, etc. Right? So when you are learning a Spanish or a French, it's okay to learn the language as a hobby or learn just words in there, just vocabulary in there. But English is always linked to career and job. So you need to actually speak English fluently to get the outcomes of learning the language. And we believe that there's a wide gap in the market where you don't really have a solution which can help you improve your speaking skills particularly. And I think that's the right for Stimuler to exist today.
Okay, Lynn, let's get to that fundraising. $3.75 million in your pre-Series A round. How exactly are you going to deploy this for growth? And, how will you ensure that you achieve this kind of monetization?
I think primarily, we believe we are an AI-first company. We started like a year back, and all of us have sort of grown into this world. And like we started in college, so this is our first job outside college. So I think like we are very, very clear that we want to build an extremely high density talent team. We have a team of 9 people today, including the 4 founders. So one of the major goals for us is hire 5 to 6 engineers over the next year and maintain the talent density out there. Then the next goal for us, second goal for us is on the AI infra side, invest in GPUs, invest in stuff. So we are very clear that we want to own our in-house AI stuff. So we want to own our models, we want to own our infrastructure, and we just don't want to be a consumer of AI, but we want to make sure that all the tools we are using, all the architecture we are using, we are controlling that, and we are building a differentiation over that. And I think finally just growing the distribution network. So most of our distribution today happens via TikTok. And I know it's banned in India, but most of our user base is outside India, in Latin America and Indonesia. So just expanding the TikTok network.
But what we wanted to understand, what will really aid this 5x growth in monetization, which is currently at 45,000 of your total user base. And also the majority of your paying user base today comes from outside of India. Is that correct?
Yes, most of our users come from Latin America, which is Mexico, Colombia, etc., followed by Indonesia, followed by India. In terms of like what will aid, it's primarily product development. I think Stimuler is by far the best product in the world today when it comes to this huge need of speaking English fluently. I think over 1 billion people need that. So it's just about getting the product better. making sure that the product is even better than all the other competitors combined, and then sort of just increasing the distribution capability so that more and more people know about it. So I think this is more of an awareness problem alongside sort of just making sure that the product is continuously getting better every day. As long as we are able to do those things, I think the product will definitely grow.
All right. And you know, which are the markets that you anticipate are going to be the fastest growing for you? Whether that is India, Latin America, Southeast Asia, and which regions are going to drive that next leg of growth for the company? Will there also be new markets that you're looking to enter?
I think we are very clear today that LATAM and Indonesia are our two priority markets. I think we have a sizable presence in these two markets. So it's just like making sure that we are number one in those markets as well as just growing our positions. That being said, India is also a huge market for us, and we're also running experiments in other parallel geographies like EU or Middle East, just to see if the need is really strong here, because it's a global problem, like almost every single country. So our 45,000 paid users today come from 175 different countries. So, which means that like there's a need in every single country. It's just about focusing. And for us today, the focus is LATAM and Indonesia, by just making sure that we are still continuing experiments in different countries.
Okay, and a quick word on your business model as well. What kind of average revenue per user are you generating across these paying users you have? And what sort of top line and bottom line is the company currently clocking?
So we are over 1 million in top line currently, but it's very early numbers today. But in terms of like how much we charge, differs a lot country by country because of the diverse user base. I think roughly we get $16 to $20 on an average across our user base on Android and iOS.
All right, and finally, Akshay, just to confirm, I know you spoke about why English, but to diversify. In the future, do you have plans of foraying into other languages? And what sort of diversification plans do you have in the medium to long run? On one hand, you have, of course, AI, generative AI, that can help users learn languages better than before. And then you, of course, have established players like Duolingo and so on that are also catering to the same market. So do you have longer-term diversification plans for the company?
I think immediately no. We want to make sure that we are the number one player in English. English drives 70% of language learning revenue. So I think that's the biggest market. That means if we are able to solve that playbook for English, it's very easy for us to expand to any other languages we want to. But if you talk about next 3 to 4 years, geographical distribution and making sure we are number one in our target geographies, that's more important for us compared to expanding languages.
All right, so the focus will remain squarely on English. Thanks very much, Akshay, for your time here today. It's been a pleasure speaking with you. Thank you.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up next, Restroworks unveils the Restronext CX Suite at the NRAI Food Delivery Summit 2025, aiming to transform restaurant customer experiences. What does this mean for the industry? We find out on the other side. Stay tuned.
Welcome back. You're watching Startup Street. Now, Ather Energy made a tepid debut on Dalal Street. The shares listed at a premium of over 2% over its IPO price, but they fell by about 6% later in the day. The company's CEO, Tarun Mehta, told CNBC-TV18 he still remains bullish on their near-term growth.
We are extremely bullish about the near-term growth because of distribution, because of how Rista, a new family scooter, is landing in the market, and generally how well the India premiumization story is really taking off, where Ather really plays in the center of it. Overall, I think both margins and volume and market share, all three should trend really well this year. I'm personally definitely expecting an even better trajectory than what we saw in FY25.
The Indian government has issued fresh, stringent guidelines for satellite internet players like Elon Musk's Starlink to get a license. The telecom department issued new security parameters mandating essential functions to be located within India, citing tensions with Pakistan. These include ability to intercept communications and monitor user activity. Minister of State for Communications Chandrasekhar Pemasani says satellite players will have a minuscule role compared to traditional systems. Reliance Jio and Bharti Airtel recently announced tie-ups with Starlink to bring its services to India, subject government approval.
The global news that we're tracking for you today on Startup Street, American food delivery platform DoorDash will acquire British rival Deliveroo for nearly $4 billion. DoorDash says it will acquire stake in the company at 180 pence per share. That marks a 44% premium to Deliveroo's previous closing price. This is going to boost DoorDash's international expansion plans. But back home in India, 197 Communications, which is Paytm's parent company, reported losses which widened, a net loss of 544.6 crore rupees for the quarter. The company also reported a net loss despite its other income increasing by nearly 100 crore rupees from last year to 223 crore rupees a share. The reason for the loss, of course, is an exceptional one-time item that included the ESOP cost that the company had to account for in the quarter. Paytm had reported another income of 131.7 crores in the base quarter. It reports an exceptional loss, like I said, of 522 crore rupees.
At the NRAI Food Delivery Summit 2025, restaurant tech firm Restroworks unveiled the Restronext CX Suite, and a new all-in-one customer experience platform designed to modernize how restaurants serve guests. For more on the launch and what it means for the industry, Aishwarya Anand caught up with Restroworks co-founder and CEO Ashish Tulsian. Take a look.
That your food could order itself? Well, the future of dining is here, and it's smarter, faster, and completely in your hands. We are coming to you straight from NRAI Food Delivery Summit 2025, where restaurant tech got a massive upgrade. Restroworks, the brains behind restaurant tech for brands such as Nando's and Taco Bell, has launched Restronext CX Suite, an all-in-one platform which will redefine how you order, eat, and repeat. From self-order kiosks to custom inbuilt apps, this is built for speed, control, and no middlemen. Well, let's check it out and see how it works.
Restronext with our CX Suite, we are aiming to empower restaurants not to just fit in one mold, that this is how your menu is going to look like, it is going to be straight, but how can you customize your experience for your patrons, for your customers in such a way that it's unique and yet quite usable.
Can restaurants fully customize the user interface and ordering flows using the app?
Almost. So there is a method to the madness. At the end of the day, today Swiggy and Zomato have really created a great, I would say, a do-it-yourself culture where every consumer is willing to pull out their phone and, do the order themselves, right? So if you take it really far away from that, it's going to be trouble. So we still feel that that's the benchmark. But yes, restaurant owners can customize almost every other living element without fiddling too much with the flow.
All right. And what will be the average implementation time when the entire suite goes live?
Oh well, we are scarily fast on that, and I think this sounds like a brag, but for example, we are at NRAI right now, and there are 7 brands who are displaying who are doing their food here. 4 of them are not even our customers, but we were able to set it up for them in a few hours. So our implementation timeline for new customers is less than 72 hours for the entire sign-up to deployment of the suite.
Give us a sense of how many customers do you currently have, and of that, what percentage have you already onboarded for this, and how many have shown interest?
Oh well, we currently work with 23,000 plus locations across the world, but the suite is just launched. We are already live with Taco Bell and Subway, 2 iconic brands in India. We are live with a lot of Middle Eastern brands and a few brands in the US. Still early days. I think from our overall estate, less than 1,000 stores are live on the CX Suite, but I think 2025 and 26, we want to achieve almost 80% coverage within our customer base.
I also want to understand that how are you ensuring profitability? While eliminating third-party aggregator dependency for, your restaurant partners. How does that work?
I don't really look at our CX Suite as something that is going to remove aggregators or third-party delivery. I think third-party delivery is a consumer's choice. Honestly, I think the most success that I've seen with a brand's own customer experience part is not more than 30% orders, in their entire delivery suite coming from that. So 70% market of the delivery is going to remain with aggregators, and I believe, correctly.
That's the right way to.
That's the right way to look at it.
All right, on that note, we're going to wrap up this edition of Startup Street. From Arundhati and me, it's a goodbye, but stay with us. More news and updates will continue on the other side.